Good afternoon, everyone. Thank you for joining us. I'm Michelle Dunnick, the Director of Events and Investor Relations at United Way of Southeast Louisiana. United Way of Southeast Louisiana, together with the Louisiana Hospitality Foundation and Entergy Corporation, are proud to support Phase 2 of the Hospitality Cares Pandemic Relief Program, which provides legal support and counseling services in partnership with Southeast Louisiana Legal Services and Loyola Center for Counseling and Education. Thank you for joining us today, and I will turn it over to Paul Tuttle, the Director of the Low Income Taxpayer Clinic at Southeast Louisiana Legal Services. Thanks for joining us, Paul.
Thank you for having me. I appreciate the opportunity to present on these tax topics. Okay, well, today's presentation is called Know Your Rights, Tax Guidelines for Tipped Employees. I've touched on this subject a little bit in other presentations, but this is the first time that I've kind of gone in depth into it. I hope everyone can hear me okay. If you can't, just maybe say something in the chat and we'll try to remedy that problem. So my name is Paul Tuttle, and I'm director of what's called the Low Income Taxpayer Clinic. And we are part of Southeast Louisiana Legal Services, the local legal services providers here in the New Orleans area. And there's our contact information, also our website, if you need more assistance. And I'll be talking at the end of the presentation more about what the Taxpayer Clinic does, and also giving you some other information. But right now, let's dive into our presentation. What are tips? Tips are any optional or discretionary payments from a customer to an employee. And the important words here are optional and discretionary. If it's something that you have to pay, then it's not a tip. It has to be completely optional, discretionary. The United States has a tradition of people leaving a little extra for good service, or if they appreciate what the person has done for them. And this is called a tip. And a tip is usually in cash, but it doesn't have to be. It could be possible for someone to give you a tip by giving you tickets to a football game, or coupons that'll help you buy something, or even just a straight out gift. If they're doing that as, appreciation for something that you've done for them, then that's actually a tip. And the value of that is just the same as the cash value of a tip. And the big thing to remember is that all tips are considered income by the IRS, and they are subject to income, Social Security, and Medicare taxes. And they're supposed to be reported to the IRS. The only exception being if you make less than $20 a month in tips, then you don't have to report that. So tips might be left as a cash on the table after you've helped somebody, if you're a waitress or a waiter and you've served them a meal, they may leave you some cash on the thing, you put it in your pocket, or your restaurant or your employer might have a different system where you put all the tips together and then distribute them at the end of the day. So how does this get reported to the IRS? Well, the employee, for one, should keep a tip log. Every day after you've worked, you should keep track of the tips that you've gotten that day and write it down. And it just can be a total amount, at the end of the day, whatever you get. And the employee should report all tips to the employer if you don't have some kind of system in place for that to happen. Now, in these days where a lot of people are using credit cards or debit cards to pay tips, the employer is kind of being informed of that through the credit card machine and the charges that are being made to the restaurant. So you may have a system in place where the employer knows what tips you're getting. But if not, if it's cash on the table and you put it in your pocket, at some point at the end of the week or at the end of the month, I guess at the end of the month would probably be the most efficient. You got to report your tip to the employer. And if it's in a paper form, keep a copy of it for yourself. And it basically just has to include basic information, your name, your address, your Social Security number, the employer that you're reporting it to, what month it is, and the amount of tips that you got that month. And that way you've done your duty as far as reporting your tips to the employer. And lastly, the employee should include tip income on their annual federal tax return. You add up all that stuff that you've done. I mean, and in fact, if you have to do paper reports to the employer, that could be your tip log. So you use that tip log if you don't have any other system, and you use that to report that income to the IRS. And just to get a little bit off topic here, service charges are not tips. This comes up a lot. A service charge is any amount charged to the customer automatically and that they have to pay. So the customer does not have the right to choose the amount or whether to pay it. They have to pay it. So this is not a tip because it's not discretionary or optional. And a leading example is a lot of times restaurants will add on a gratuity for large parties. And that party has to pay that gratuity. They don't have a choice about it. So these service charges don't have to be reported to the employer by the employee, because the employer, it's part of the income that the employer is getting because they're automatically charging for it. So they should keep track of that, and they should include it as wages. For example, if you receive the 18% gratuity, the employer is in charge of recording that, but they also have to, if they give it to you, they have to include it as wages to you in your W-2. And this makes a difference for the employer because the service charges are income to them, meaning they have to pay income tax on it. So you may have some resistance to doing this. And in all the things that I'm talking about, you're probably going to run into employers that do not do things the right way. And we'll talk more about what to do in that situation later. So what are the employer's responsibility? Well, the employer must keep records of all the reported tips. If they have some kind of system for keeping track of charges on their credit cards, or if they're just keeping track of what's reported by the employees with their paper reports at the end of the month, they're supposed to keep those records. And this is the big one. They're supposed to withhold taxes from tip income and pay that to the IRS throughout the year, just like they would with any W-2 employee. For example, I'm a W-2 employee. I get a paycheck and my taxes are withheld automatically every paycheck. And periodically that money is sent to the IRS so that I get credit for it when I file my 1040. So the employer is supposed to be doing this for your tip income also, as well as your straight wage income. So the employer must pay their share of Social Security and Medicare taxes. Not only you are paying taxes with W-2, but the employer is also paying a share. They also have to pay unemployment taxes on that tip income. In case you lose your job and you qualify for unemployment, your tip income should count for the amount of unemployment that you get. And lastly, the employer must report all this on the employee's W-2 at the end of the year, so you can use that to do your 1040 tax return. So there are probably a lot of people out there saying, well, I've worked in restaurants for a long time and nobody does this. Again, we'll talk about that later. And we'll also talk about why it's important to try and get to work for an employer who does things right, or to get your employer to do the right thing. One, it increases your share of, it shows the government your true income. It also withholds the correct amount of taxes. So at the end of the year, you don't owe anything and might get a refund. And then when you retire, and this might be a long way down the road, but it's something to think about. When you retire, this is going to be very, very important in determining your Social Security, retirement, disability, and Medicare eligibility. So when it comes time to file your return, you know, this happens in the spring of every year. It's usually due by April 15th, although for this year it was due June 16th, I believe, because of the pandemic. You're going to use the information provided on your W-2 to complete your federal tax return, and it should say how much you got income, including tips, and it should have withheld the correct amount of taxes. If it's not correct, if you know that there's tips that weren't reported to the employer, then you have to fill out a special form called Form 4137 to figure the taxes on the tips that you didn't report. And you would include that with your 1040. And all these forms that I'm talking about, www.irs.gov, all the forms for every year can be found on that website to be downloaded and printed out. And very good source also for information, for stimulus funds or anything like that. You can ask questions in the search box about tax issues and get answers to tax issues. So pretty important website. We'll have that written out at the end of the presentation. So if you've requested the proper withholding with your Form W-4, when you start working for somebody as a wage employee, you're supposed to fill out what's called a W-4, and you say whether you're single or married and how many people in your household and all that. And your taxes that are withheld from your paycheck are figured from this W-4. So you want to put the correct information on that W-4. And you also, so there's three main taxes that you have to pay: income tax, Social Security tax, and Medicare. Medicare and Social Security are taken out automatically. There's nothing you can do about that. But you do have a choice about how much income tax you want to have taken out. And I always recommend that you have the proper amount withheld, and don't say no withholding or zero withholding. Because then at the end of the year, you're going to owe an entire year's worth of income tax at one time when you file your 1040, and you may not have the money to cover that. And that's when you're just going to start getting into a hole with the IRS that's just going to get deeper and deeper. So although it might be painful, it's better to take out the money a little bit at a time with each paycheck so that you're covered at the end of the year and may even get a refund. So what if you're looking at your W-2 and it lists only your basic wage income and not your tips, or there's some other problem with it? Well, the IRS says that you should try to resolve the issue with the employer first. Bring it to them and say, hey, my records show that I made this much money and I should have this much withheld. Can I get a correct W-2? If the employer refuses and doesn't have a good reason for doing so, then here's a phone number that you can call the IRS. And basically, you're going to reporting to the IRS that this employer is not doing the correct thing. If you don't get a corrected W-2 by the time you file your 1040, you shouldn't wait. The return is due April 15th, no matter what. So you want to get it in on time so you don't have to pay late filing penalties. If you don't get a corrected W-2, then you would use your own information to fill out your 1040. And you would also use this IRS form 4852 to show the IRS to say, hey, I know my employer reported this and I'm enclosing a copy of that W-2, but I think it is incorrect. My records show this information. And you want to have those records to substantiate your claims. You're going to want to have your tip log or your canceled checks or your bank records that show deposits. You're going to want to have records to show that the information you put on your 1040 is correct, because they're probably going to come back and ask you to substantiate those claims. A lot of people don't realize this, but federal and some state laws allow employers to pay tipped employees less than minimum wage. And Louisiana is one of those states. So if you go to work for a restaurant for the first time, you might be shocked to learn that you're only going to be paid $2.30 an hour. The thing is, the employer is getting a credit for the tips that he expects you to receive. And taken together, the wages and the tips must equal or exceed the minimum wage. So that way, the employer can say, well, all in all, they're getting minimum wage and I'm taking out taxes from that. If I paid them minimum wage and tips, I wouldn't be able to afford the taxes, which is what they would say. So that's why they have these laws here in Louisiana. Now, employers are supposed to guarantee the above, that your wages and tips equal or exceed the minimum wage. You're still supposed to be getting the minimum wage. So for example, if you spend part of your day doing non-tipped work, for example, in a restaurant, it's common for you to have to set up the tables, put out the silverware, maybe clean stuff, all those kind of things where you're not serving customers and you're not getting tips. During those hours, you're supposed to be getting at least minimum wage. This whole thing about the $2.30 is only supposed to apply to those hours in which you are actively serving customers and getting tips. And this is a common form of what we call wage theft, in which a restaurant or some other employer might say, I only pay you $2.30 at all, during all hours. And yet most of the time you're not getting tips and your total wage does not equal the minimum wage. That's not supposed to happen. And we'll talk more about what to do in that situation. And lastly, many companies may have a tip sharing arrangements where all tips are put into a common pool and then allocated to the employees at the end of the day. Even under this situation, if you're working back in the kitchen or if you're a busboy or something like that, then you should still be getting a federal minimum wage with your basic wage and your tips put together. And if you're not, then you have a valid complaint. So we've been talking about wage employers, or people that get a W-2 at the end of the year. But you might also be paid as an independent contractor. And this is kind of common in beauty shops, barber shops, other businesses where you're kind of renting a chair. You can set your own hours, you can have your own customers, you kind of follow your own will and how you do things. So in that case, instead of being an employee, you're paid as like a self-employed person who happens to be in this space, renting space from the employer. So you're going to get a 1099 at the end of the year. This is very different from a W-2. And the big difference is that 1099 income, the employer does not deduct any taxes. The worker is solely responsible for figuring and paying taxes on his total income. Also, they don't pay unemployment taxes for you. So if you happen to lose your ability to do that job, you might not be eligible for unemployment because you are self-employed. So there are many factors in being categorized as an independent contractor, but most importantly, the workers got to have some kind of freedom. They set their own hours, they decide when to do things, how to do things, what equipment to use, how quickly things are done. It is common for people to be miscategorized. Obviously the employer would rather pay you as a 1099 person. They don't have to deal with withholding taxes. They don't have to deal with keeping records as much. They don't have to do a lot of things. And they also don't have to pay their share of Social Security, Medicare, or unemployment taxes for you. So there's a very common for an employer to try to miscategorize their workers as 1099 workers, even when they really don't have any freedom. They come in and set hours. The boss is the one that tells them what to do. They have to do things the way the boss wants. They don't have any other customers. They work all the time at this one place. Once you get those kind of factors coming in, it sounds less and less like you're an independent contractor and more like you're a wage employee. And you can contest your categorization with the IRS and say, hey, I thought I was going to get a W-2, but I got a 1099. I think I've been miscategorized, and I think the employer should be responsible for paying the taxes on this income because they should have. But let's say that you really are a 1099 worker, you're a barber, you kind of set your own hours and all that, and you only come in when you want to and all that. So how are you going to pay your taxes? Well, the easiest way to do it is to figure your estimated taxes every 3 months and pay it to the IRS throughout the year. If you go to the IRS website and type in estimated worksheet or estimated payments into the search function, it'll give you a worksheet that you can use to figure what payments you have to make. Basically, you're going to report what income you think you're going to make in the next 3 months, and the IRS worksheet tells you how much taxes would be due from that, and you pay that from what you got in your last, 3 months of payments. And then if you do that at the end of the year, your taxes are going to be up to date. You're going to have paid your Medicare, Social Security, and income tax, and you might get a refund just like everyone else. Payments are made quarterly, 3 months, like for me as a W-2 employee, my taxes are taken out every single paycheck, 2 weeks. For 1099 people, it's 3 months. You can make payments by phone, online, or just mail it into the IRS. And if you don't do this, then you're going to owe an entire year of taxes. And this is even worse than just having your income tax zeroed out when you're a wage employee, because you're going to owe Social Security, Medicare, and income tax, which is going to be a substantial amount. And also, because you didn't make estimated payments throughout the year, you're going to owe penalties and interest on that. Because we have a pay-as-you-go system here in the United States. You're supposed to pay your income tax as you earn the income. So that's going to probably be, this is something that I see very often, is it's going to be a lot of taxes. And if you do this for a couple of years, you're really going to owe a lot of money and create big issues for you. And I'll just say that 1099 income is often reported to the IRS, just like W-2 income is. So the IRS can see that you're getting that income, and they might even file a return for you if you don't file one for yourself, and they'll charge you the maximum liability. So this sounds all like a lot of work and a lot of pain, keeping these records, paying these taxes when it's hard to make ends meet. Having that extra income tax taken out of your paycheck may hurt. So why is it important to do this? One, your eligibility for credit, such as mortgage financing, credit cards, and other loans, depends on your reported income to the IRS. If you don't report anything and don't file any returns, then anyone taking a loan application from you is just going to say, okay, you don't have any income, why would I loan you any money? And they're not going to depend on your say-so that you work at a restaurant and earn this much money, or as a bartender or whatever. They're going to want to see your tax returns, and they're going to want to see how much income you reported every year. So you're going to want to have those returns, and you're going to want to report the correct amount of income so that you can hopefully get a loan that you need. For example, if you want to buy a house or start a business someday or something like that, it's very important to have those tax records to be eligible for financing. And we see this a lot. In the last year or so, your eligibility for special tax credits, such as the pandemic stimulus funds, may depend on the filing of returns. The IRS was put in charge of handing out the stimulus funds based on tax filing. So if you hadn't filed in many years, then they didn't know where you were or who you were, and you might not have gotten those funds. You may be eligible for tax refunds that you might not know about, such as the earned income tax credit or child care credit or other things. And you might be afraid that you're going to owe money. But if you do the return, you might find out that actually you get a little bit back, because there's a lot of credits and refunds that are available out there. And lastly, this is also something that came up a lot in last year during the pandemic. Your eligibility for unemployment benefits may depend on your reported earnings. So if you're working under the table and not filing tax returns, when it comes time, when you lose that job and you apply for unemployment, they're going to say, nope, sorry, we don't have any records of you making any earnings, and you're not eligible for unemployment. And then this is going down the line. Why is it important to pay the taxes as well as file the returns? The amount of Social Security benefits you get when you retire or become disabled depends on the payments that you made throughout your working life. So if you don't file returns, if you work on a disabled, don't file returns, don't report any income, don't pay any taxes, you're going to be very surprised when you turn 65 or 67 and want to retire, and they say, sorry, we don't have any records of any earnings. You didn't pay any Social Security taxes. You're not eligible for retirement. The only way you're going to be able to stop working at that point is if you get completely disabled and you qualify for SSI, Supplemental Security Income, which is given to people when they don't have Social Security disability or retirement benefit. Currently, the SSI payment is about $775 a month. So if you want to imagine trying to live on that kind of money when you get older, it's not a pretty picture. And I have a lot of stories about people who had pretty good careers and pretty good income throughout their life, truck drivers, taxi drivers, things like that. But when they got older, things really fell apart for them, and they really had a big drop in income because they became disabled and they couldn't get a big disability benefit, so they ended up getting SSI, and that's really hard to live on. Also, your eligibility for Medicare when you retire or become disabled depends on your payments for that tax. You will be, glad to get Medicare health insurance when you're eligible for it, but if you didn't pay the taxes, you might not be eligible. And then again, you have to wait until you're completely disabled, and then you'll be eligible for Medicaid. But that might be when you're 70, 75, and it's also not a pretty picture. And lastly, if the information on your tax return, or if you don't file return, does not match what is reported by your employer, you may be audited. So if your employer is sending in W-2 or 1099 information every year to the IRS, but you're not filing, the IRS is going to send you notices asking you to file. And if you don't respond, they're going to file for you, and they're going to charge you the maximum liability. They're going to charge you penalties and interest. And the IRS is a powerful creditor. It's not someone that you want to have coming after you, because they can unilaterally garnish your wages, seize your bank accounts, and file liens. They don't have to go to court. They don't have to get any judge's permission. They can just do it. And really no other creditor has that kind of power. So you really, if you got to owe money to somebody, you'd rather it not be the IRS. So now that I've scared you with all the terrible things that can happen, let me tell you that, there's always hope. There are collection alternatives with the IRS, even if you haven't filed in a while, even if you are going to owe money. So let's quickly run through them just so you know what they are. If you really can't pay anything right now, your income is just covering your basic expenses, and you don't have any assets that you can liquidate to pay tax liability, the IRS does have something called currently not collectible status, meaning that they won't pursue collections against you. They won't garnish your wages or seize bank accounts. But you have to send in your financial information. You have to prove to them that you can't pay anything. But if you do that, they will put you in this temporary CNC status to give you some breathing room and allow you to try and make the money that you need to make. If you do have a little bit left over after paying your basic expenses, then the IRS is going to want you to start up a monthly payment plan called an installment agreement. And luckily, they allow up to 10 years to pay liability. And I will say this too, that the IRS only has 10 years to collect liability. So once they assess your liability, which could be years after the year that it was due, they can only have 10 years to collect it. So it is possible also for taxes to expire. But if it's not expired, they will expect you to pay something. They can give you a 10-year payment plan. So it might, hopefully it'll be a payment plan that you can afford, maybe $25 a month or $50 a month or something like that. And then lastly, an offer in compromise. These are difficult to get, but if you're older or disabled and you don't have any assets and you have low income, you can let the IRS know all that. And if they accept it, they'll agree to settle the debt for less than what's actually owed. And it might even be that you offer $1 if you really have no extra income or assets or anything like that. And I've done a lot of offering compromises for people like that, but that's really for people that are elderly or disabled. So it's difficult to get, but it is an option if you really, really are not going to be able to pay your income tax, and that situation is not going to change in the future. So we talked a little bit about reporting employers. I gave you a phone number previously about if you got an incorrect W-2, but you can also report employers for miscategorizing you as a 1099 employee. You can also report them that you're not getting minimum wage. You would also, this last issue of not getting minimum wage is also something that you want to bring up with a local labor agency. And they would be the lead agency in investigating those complaints against your employer. But a viable option for you might be that you just not work for those people anymore. Try to go somewhere else where they do things correctly and you can get your taxes paid. So I just want to quickly at the end of the presentation tell you about some free services. If you're behind in filing tax returns, you can get free help with tax filing if you're low income, or even if you're just over 60 and older, you can go to the AARP and there's a number there to call them. VITA programs, volunteer income tax assistance. These are people who have tax experience in filing taxes, and they can electronically file taxes, and they help low-income people for free. My experience is they go back a year or two, or maybe 3. So if you have past years that you need to file, and you have the information, you can contact them, and they'll help you file past years too. During the pandemic, it used to be that you would meet with these people in person and just like a real tax preparer. But due to the pandemic, you may be asked to drop off information and then review the return at a later date to verify it. You might do that virtually, or it might be mailed to you, or some other alternative. And lastly, if you're not low income, you can file electronically yourself at www.irs.gov. This is the IRS website. A lot of forms, a lot of information. And also the ability to electronically file. You set up an account with the IRS. You have to have a functioning email to do that. But if you do that and set up an account, then you can do all kinds of things there. You can electronically file. You can check the status of your refunds and do other things. So that's an important website. And United Way, that's sponsoring this presentation, also has VITA programs, and I've been informed that they've decided to go year-round. They don't just do it during the tax season now at the beginning of the year. So you can still call them, United Way of Southeast Louisiana, and get help with filing tax returns even now. And then what about me? I mean, I don't file tax returns for people, so what do I do? We are the Low Income Taxpayers Clinic, and we help people who already owe federal tax liability. We help people whose returns are being audited. Just to go back, if you owe money already, we're going to try and help you get into a collection alternative that we talked about. If you're being actively audited, we'll get your evidence together and we'll contact the IRS on your behalf. People who need spouses who need to file for injured or innocent spouse relief. This is a situation in which you're married to someone who owes liability and you shouldn't be responsible for it. People who have been the victims of ID theft, a lot of times crooks will take your name and social security number and file a return under your name in order to get refunds sent to them. And you might not know that this has happened until you start getting collection notices or something from the IRS. There's a lot of ID theft that goes on, and we help people get that straightened out. And although we don't electronically file current year returns, we can help you get into filing compliance if you have to go back a couple of years and file returns. And unlike the rest of Southeast Louisiana Legal Services, which just serves Southeast Louisiana, my tax clinic serves the entire state of Louisiana. So no matter where you're living in Louisiana, or if you have friends or relatives elsewhere, they can contact us for help with these kind of issues. You do have to be income eligible, and to apply for our services, you can call my paralegal, Lynette Tillis, at the number on the screen, 877-521-6242, extension 225. This is the toll-free number. You can call from anywhere in the state, and she will see if you're eligible for our services and open up a file for you if you are. You can also apply on our website, sls.org. We have a portal for making applications online too. So I hope you enjoyed that presentation, and I can take questions if you want to put them in the chat, or if people are online.
Oh, that was great. You did scare me a little bit about not filing every 3 months if I were a 1099. I am not, but I did not realize that that was what was expected. I feel like when I was a 1099 a long time ago, it was an annual thing, and my tax preparer did not tell me that I needed to do that every 3 months. What kind of penalties do you face? Is it a steep penalty, or is it pretty minor?
Well, it's not steep, but it's the late payment penalty, because like I said, you're supposed to pay quarterly throughout the year, and if you wait until the end of the year to pay, they're gonna, I believe, I don't know, it's 1 or 2% of the total amount owed.
Okay.
But then you're also going to owe interest, 1% per month that you didn't pay it. These are things that you shouldn't have to pay, or
right.
Wouldn't pay if you did it every year. I mean, paid estimated taxes quarterly. And I'm not surprised that you didn't know about it, because nobody knows about it. I have lots of clients that have started, lawn care businesses, babysitting businesses, things like that. And nobody knows these things. And I kind of wish that maybe in high school, as part of the civics class or something like that, there was a presentation on taxes, what taxes are and what your responsibilities might be, because it seems like people really, really do not know this information.
I think they need this whole presentation on why you should do it and what your options are if you do get behind. It's really amazing. This has been enlightening. I know that Jennifer Kelly, who is on the line as well with Louisiana Hospitality Foundation, and we both learned so much through these Know Your Rights. She had mentioned in the chat box that when we were going through the pandemic relief fund applications, that we saw so many incorrect categorizations. The 1099 versus the employees. It's still, they were being paid in cash and paid in personal checks. So we definitely appreciate you going over that. I guess I just wanted to highlight the auto grad, that was a service tip, that's a service fee, and that's not a tip. And I think what I was really surprised about was if you're rolling silverware and not serving people, that's 2 different categories, well, 2 different jobs and 2 different pay wages. I was not aware of that either.
It's very common for that not to be done. And you might find that, when you're at the end of the week, when you add up your total hours and your money, that you're not getting minimum wage. And you might think that there's nothing you can do about that, but you might have a recourse with the local labor agency saying, hey, they don't pay us the 2 level of pay that they should.
Yeah. And also something else that we encountered when we were looking at applications, some people didn't have 1040s because they just don't file taxes because they don't meet the minimum threshold or something like that. What is the minimum threshold to not file taxes? But you gave many reasons why we should, but what is that threshold?
Well, it depends on how many people are in your household and whether you're married or single. The best thing to do, well, I just say generally right now, if you're single, about $12,000. If you make less than $12,000 a month, $1,000 a month, you probably don't have to file. But the best way to make sure is to go to the IRS website, look up the 1040 instructions for that year, because at the beginning of every year's instructions is a little table that says who needs to file. And it will say, if you're single, you know, if you made more than this, you have to file. If you're married, if you made more than this, you have to file. So, you know, and it changes every year. But right now it's about $12,000 for an individual. But go and look at that box at the beginning of the instructions on your, on your computer or your phone. You can see exactly how much, and you can see whether you need to file or not. But you know what? If you don't make enough to file, a lot of times that means that you're eligible for the earned income tax credit. If you worked but didn't make more than $12,000, you might get a refund based on the earned income tax credit, even if you don't have any dependents or minor children or anything, because people that make very low wages are also eligible for that refund. And that's not a refund that you pay and then get the money back. That's a refund that the government gives you as a poverty fighting program. So even then you might want to file or at least do a paper return and see, that you might get a refund.
That's really interesting. And again, you said that it's good for them to have those records for when you do hopefully retire someday, or, and to see if you qualify for Medicaid and or what am I thinking? The other program.
Medicare and Social Security.
Social Security, yeah. Okay, so we have a question. What course of action would you recommend if I'm not taking home at least minimum wage each week with tips?
Okay, well, that might be more of a question for you guys. I'm not familiar with how to report that to the local labor agency. I'm not even sure exactly what agency it would be. I just deal with the IRS. But basically, you'd be reporting it to the state agency that is over, employers and labor and things like that. You'd make a complaint to them, and they would investigate.
Okay. I think I'll have to look it up, but I will send that out. It was in I think Constance covered that in our last presentation. So I will figure out, and I will add that into, I will put that in our notes next to this recording.
Yeah, I'm sorry, I should have looked that up. I'm more, this presentation was kind of concerned with reporting to the IRS. But yeah, you'd be reporting to the local agency that controls employers and telling them, look, they're doing things wrong and you need to investigate.
Okay. And well, great. Well, these are some great tips. I think, is there anything that we didn't cover, any questions that you think are pretty common, or what cases do you see most? You said you kind of went over what you kind of see most, I guess, but I guess the tip is don't get behind on your taxes, right?
Yeah, and also, it's constant. What I hear is I can't have income tax taken out of my wages because I'm barely making ends meet as it is. And if I get that taken out, I'm not going to be able to survive. And that's a choice that you have to make. But, just remember, I also get a lot of people coming to me at the end of their working career, people who are in their 60s or even 70s. And they say, oh, I just applied for Social Security retirement. And they tell me I'm not eligible. I can't stop working. I'm tired of working. What can I do? And I can't really help them because basically they need to file 30 years worth of tax returns and pay the taxes that they would have owed, which of course is impossible for them to have a decent retirement. And, it's too late at that point. And it all goes back to those people that didn't want to take the income tax out. Didn't want to file their returns, didn't want to pay, taxes on their 1099 income. It's hard to think that far down the line, but, at some point you're really going to wish that you had paid those taxes so that you can enjoy the benefits in your later years.
I think something else I think that we ran into during the pandemic with unemployment is that some people did opt out to have their taxes taken from unemployment, which then they're going to have to pay eventually. Or I guess, yeah. So, I mean, because they needed every dollar, you saw that a lot.
Right. And, unemployment is income also, just like tips are. You have to pay income tax on it. Luckily, we got a break this year. Congress said that $10,000 of unemployment that you got last year would not be taxable due to the pandemic, but that was just a 1-year thing. So if you opted to get those taxes taken out, you would have gotten a bigger refund when you filed your return.
And if you filed prior to that, like announcement, you can just refile, right? Or you do kind of an amendment thing? What is it?
No, the IRS has said that they're automatically going back over the older returns and fixing that issue. And I've seen that with some of my clients where the IRS sends them a letter and say, hey, here's an additional refund that we were supposed to give you. If that hasn't happened, then you want to contact the IRS, their general contact number, and say, hey, this hasn't been taken care of for me yet.
That's pretty amazing. Okay, well, I just wanted to plug the VITA program once more. It's for, like Paul said, we are having these services at our offices on Canal Street at United Way. If you make under $56,000 in 2020, you're eligible. It's also for persons with disabilities and the elderly or anybody with limited English speaking. So we have Miss Helen, the wonderful Miss Helen, at our offices on Tuesday and Wednesday from 9:30 to 1:30, and you can just walk in and have an appointment with her, and she can help you with those. So again, Tuesday, Wednesday, 9:30 to 1:30. So thank you so much, Paul, for this. If you could send me this presentation, I'd love to share it with everyone who tuned in and signed up. It's got a lot of great information. And please tune in for next month's Know Your Rights. We're going to be talking about, we're going to compare different states' rules on tipped employees. So hopefully we can move forward in Louisiana with some of these suggestions. I think we're going to be looking at New York and California specifically. So again, tune into next month's Know Your Rights. And thank you so much, Paul, for joining us. I hope you have a wonderful week.
Thank you. And thank you, everybody, for tuning in. Bye-bye.